If you are looking to invest in a company or buy their stock, maybe the first question that you should ask yourself is, would you buy their product yourself? And if the answer to that question is no, then I encourage you to ask yourself, why are you buying the stock of a company whose product you don't even want to buy? You know what I mean? Like, they don't even have your vote. For example, a few years ago, my friend told me that he bought Snapchat stock. And as soon as he said that, I thought, nobody uses Snapchat. So I asked him, do you use Snapchat? And he said no. So I asked him why he bought Snapchat. And he told me it's because the share price is down. And the stock has been on a downtrend lately. And it used to be a very popular company back then, so it has to go up, right? I mean, we don't need to get into what happened to Snapchat. Obviously, that didn't go very well. That particular investment didn't go very well. I mean, it's just a very basic thing. If you're looking to invest into a company, meaning you want the company to grow, isn't it the most basic criteria to fulfill that you are their customer? At least, if the company didn't even win your vote, chances are they are not going to win a lot of other votes. And by vote, I mean their money. Like, for example, I wouldn't invest in Apple stock if I use a Samsung S25 Ultra. Like, that doesn't make any sense. Why didn't I buy the iPhone 16 Pro Max? Of course, there are some nuances to this. Maybe you are not the target customer of the company that you're looking to invest into. In that case, then you should put yourself in the shoes of their target customer. For example, I don't buy designer goods. I don't know anything about designer bags or shoes or whatever. So if I were to see a potential investment in a designer industry, then I should put myself in the shoes of someone who would be that customer and determine if a particular designer goods company, say Prada for example, that I would choose Prada over other competitors, I don't know, on the other brands. Sometimes I feel like we are over fixated on things like technical indicators and price action that we forget to consider these very basic criterias. I have made this mistake myself quite a few times where I invest into a company that I would never buy their product, but I'm buying the stock because of price action and hoping that it will go up. But generally that doesn't go very well. Bad idea. I mean, like, if you're looking to invest long term, you want the company to grow, at least you should be their customer. I don't usually refer to Warren Buffett a lot or Buffett, but for the point that I'm trying to make, Warren Buffett is actually a very good example. So yeah, investing into a company whose product you wouldn't even buy, bad idea.